The US and China, the two largest economies in the world, are locked in a vicious, high-stakes tariff war.
US slams China with shocking 145% tariffs.
Trade war erupts, America hits China hard.
China can't keep ripping off the USA. These tariffs are necessary, fair, and long overdue.
The tension didn't start yesterday. The roots of the US-China trade war go back decades. Since China joined the World Trade Organization in 2001, American policymakers have accused it of currency manipulation, state subsidies, intellectual property theft, flooding global markets with cheap goods. By 2017, the US trade deficit with China had ballooned to over $375 billion, and former President Donald Trump made it a central mission to level the playing field. In 2018, he imposed the first wave of tariffs on $34 billion worth of Chinese goods. China retaliated, and just like that, a trade war was born. Fast forward to 2025, and the tariff war just went nuclear. On Friday, China slammed a jaw-dropping 125% tariff on US imports, up from 84%, as a direct counter to Washington's aggressive new levies. In a fiery and defiant statement, China's finance ministry didn't mince words. It accused the US of bullying and warned that America was becoming a joke on the world stage. Even if the US continues to impose higher tariffs, it will no longer make economic sense and will become a joke in the history of the world economy, the ministry declared. Dramatic? Yes, but also very telling of the sentiment in Beijing. Meanwhile, the White House clarified that tariffs on Chinese goods were actually sitting at 145%, not the 125% previously reported. So what we're witnessing is a full-blown tariff arms race. Let's talk cold, hard numbers. In 2024, the US ran a $295 billion trade deficit with China. That's based on $440 billion in imports from China, $145 billion in exports to China. This means China, in theory, has more to lose if US consumers stop buying. But here's the twist. American consumers are heavily dependent on Chinese goods, especially in electronics, textiles, pharmaceuticals. Meanwhile, Chinese companies can find alternative markets. But losing the US market will hurt, especially in a slowing Chinese economy already battling deflation and a property crisis. According to Mark Hafel at UBS Global Wealth Management, while the tariffs will definitely cause disruption, a more severe economic downturn is now more limited. As always, the markets were the first to panic and then party. This week saw a roller coaster on Wall Street. Sharp losses early in the week, historic gains midweek, turbulent sell-offs by Thursday. By Friday's close, S&P 500 had its best week since 2023. Dow Jones soared. Nasdaq clocked a 7% weekly gain, its best since 2022. This kind of market reaction reveals one thing. Investors are confused, concerned, but also cautiously optimistic that this war won't spiral completely out of control. But overseas? Germany's DAX fell 1.5%, Japan's Nikkei 225 plunged 3%, South Korea's Kospi shed 0.5%. The ripple effects are global. Interestingly, both sides are showing signs of restraint, at least publicly. China's statement hinted it would not raise tariffs again, even if the US retaliates further. The message? If the US continues to play the tariff numbers game, China will ignore it. Economists like Zhiwei Zhang are interpreting this as the final escalation, but behind the scenes? According to reports, the Trump administration warned China not to retaliate and suggested that Xi Jinping should call President Trump to work things out. Meanwhile, Trump took to Truth Social to declare, at some point, hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable. Tensions are high. Egos are bruised, and national pride is on the line. Let's break down the fallout. Who's winning? Who's losing? USA winners, American steel, aluminum, and agriculture sectors receiving subsidies. Losers, the US consumers facing higher prices at Walmart and Target small businesses reliant on Chinese suppliers, tech companies like Apple, Nvidia, and Tesla, with China-dependent supply chains. China winners, Chinese domestic manufacturers getting a boost from substitution. Losers, exporters who rely on US markets, Chinese consumers paying more for American goods. A slowing Chinese economy now facing added stress. Bottom line, this is a war without a clear battlefield, but with real-world casualties. What lies ahead? Some analysts believe we are entering a new Cold War, but this time it's not nuclear weapons, it's tariffs and economic leverage. Others argue this could force the world into economic realignment, with India, Vietnam, and Latin America stepping up as new global suppliers. Meanwhile, the USMCA agreement continues to protect North American trade, while Europe and Asia scramble to stay neutral or benefit from redirected supply chains. What's certain is this: the world is watching, markets are trembling, and every consumer, every investor, and every business is caught in the crossfire. Trade wars are never won. They are merely survived. Whether it's the US leveraging its financial might or China playing the long game with strategic patience, the global economy is the true battlefield here, and we're all standing on it. So who will win the US-China trade war? Is it the boldness of America or the discipline of China that will triumph? Tell us in the comments below. We're featuring the best answers in our next video. And if you found this deep dive helpful, don't forget to like, subscribe, and ring that bell so you stay updated on every twist and turn in this global financial thriller.